Good day, this is your European Open briefing for Tuesday, June 28th. My name is Michael Florentiades. I am the Chief Economist at xm.com, and here are the key points for today. We have some calm following the Brexit volatility during this European Open. Risk assets are rebounding a bit on bargain hunting. Shorts are taking some profit. However, sentiment is still fragile. The UK has lost its AAA rating from S&P, Standard & Poor's. On the calendar today, we have statements out of the EU summit in Brussels, and we have the ECB conference, ECB forum in Portugal, and the two pieces of data, US final GDP for first quarter and consumer confidence. On to the pound is rebounding from yesterday's 1.3118 30-year low. 133.35 was the Asian session high, so we're looking for that range, whether there's going to be a breakout on the upside or downside, more likely on the upside right now, of course. We had the S&P downgrade of the UK by 2 notches, still relatively high at AA. Mind you, it's on par with a lot of other nations. Not a lot of countries had a AAA rating, and it should be noted that other rating agencies had taken away the UK's AAA rating even before the referendum, so maybe S&P coming more into line with the ratings of the other agencies rather than doing something dramatic on its own. There was Prime Minister Cameron's address to Parliament yesterday. There was no real news in that, nothing groundbreaking, let's say. The key takeaway point is perhaps that access to the single market, something that Leave campaigners have also said they want. From the Prime Minister's view, it would require free movement on labour and budget contributions, and that is, of course, something, those two conditions are something that the Leave campaigned against. On to dollar yen, we have it fluctuating around the 102 area. It has not dipped below 101.3 following the initial reaction on Friday after the announcement of the referendum result. So it's more or less holding the 101.3 level. It's giving some respite to Japanese policymakers. On to the S&P 500. It's an important gauge for risk sentiment. 2000 is an important focal point right now. The S&P closed at 2000.67 yesterday, so are exactly at this key psychological level. It will be interesting if bargain hunters dip their toes in the water by buying some risk assets, and how sustainable a rebound will be. If these attempts at a rebound do not prove sustainable, at least for a few days, policymakers may have to deal with a real headache trying to stabilize the situation. So risk assets definitely key to watch for some semblance of normality to return. Now the euro, it was below 110 yesterday. Right now it's climbed above 110 euro against the dollar, that is. So the low yesterday was at 1.0968. Right now the euro is below its 200-day moving average at 111, so it would be interesting to see whether that particular level acts as resistance. I think for the euro it will be key to watch how jitters concerning the pound and some Southern Europe worries hurt it, although it must be said that the result of the Spanish elections on Sunday did seem to help stabilize sentiment, because the far left lost ground in those particular elections. So maybe the anti-Euro or anti-Europe forces not gaining much momentum following the British result, but it's all too early. We will have to wait and see. Oil has also rebounded. It's around, it topped the $47 level. Yesterday was around 45.83. Basically, oil and stocks right now are a similar trade, so we can watch oil as well to get a sense of how risk sentiment is progressing. And oil may be an indication of confidence in the global economy. If the global economy is going to do well, there's going to be demand for oil, and its price is going to hold around the $50 and keep the gains that it has made in recent weeks. Onto the calendar, we have two key data out of the US today, the only important data that we are going to watch. We have the final GDP revision. It's expected to be revised up to 1% from 0.8%, the second estimate. May I remind you that the first estimate of US GDP was at 0.5%. So doubling that is, a big improvement, but 1%, it can be argued that it is still quite a low figure. Nevertheless, much better, of course, than 0.5%. Consumer confidence is expected to rise. The conference board's consumer confidence released a little later. But I think the main focus will still be on what policymakers have to say. First of all, we have the ECB forum at Sintra, Portugal, where Draghi, Pratt, Kerr will speak, all members of the ECB board, so there will be plenty of chance to give their views and maybe tell us what they have in mind, how to react to the Brexit situation. The Bank of England's UK Financial Policy Committee is going to meet. We have seen bank shares in the UK under tremendous pressure, losing a third, some banks losing a third of their value in a couple of days, other banks losing almost a half of their value on the stock markets. So we see some nervousness concerning the UK banking sector, so they will have things to talk about there for sure. We also have the two-day EU summit of heads of state, and this is really the highlight of the day and the development most people are expecting. UK's Cameron is going to take part for part of the proceedings, not for the both days. So we should look for some understanding between UK and EU heads of state on what lies ahead. We should probably get some conciliatory remarks or showing that progress is going to be made and there is a roadmap of how the UK is going to exit the EU. Hopefully we will see some calm and let's say not as much measured reactions in the style of Angela Merkel from Germany. So she said that we should give the UK time to decide and not press them for immediate action, although obviously this cannot go on for much longer. So it will be interesting, the various statements from the key EU figures, what they have to say and what common position they forge today and tomorrow on how to deal with Brexit. So that's all for today. Thank you very much for watching and have a great day.